Good morning, all. CamelbackTrading.org coming to you this Wednesday morning, July 1st. We're looking at the market profile of the SPY ETF here on Window Trader. Start of the second half of the year. And after a beautiful ending to the quarter yesterday, which was no surprise, we are now trading in balance, in value. I guess the best way to describe M period, not just yesterday, it's like a 2-year-old on a sugar high, and you just got to let them run until they wear themselves out. I mean, you just look here. M period from the 25th, the 26th, reversal bar. Yesterday, the 29th, ripped up, and then yesterday's action. That's why I say M period does not follow really any rules of how the profile has been shaped the entire day, right? We had a P-shaped forming yesterday until it just decided to rip. M period is so much more important the following day or the following days. And again, today, that's going to be the case. So the buyers had a lot to lean on after yesterday's action. But right now, the price probe, right, with just over an hour to go to the opening, the price probe's being firmly rejected. Now, another stat I saw, July 1st, I don't know how many years it's covered, has been up 87.9% of the time. So I guess we should just throw everything out the window and just buy the market because we're going to close up today, right? The odds are incredible. I like 88% odds. If you gave me 88% odds on a trade every day, I would take it. However, that's not on a trade. That's just a number being thrown out for the day. Reasons why? Well, new money comes flowing in from the funds, right, to start the third quarter. But am I going to just say and throw caution to the wind and be a buyer because 87.9% of the time we're up? Of course not. Of course not. So just keep those things in mind as we go forward. Now, let's go over destinations and a game plan. So right now this morning, my first destination on the upside is my pre-market high of 309.40. Then we have yesterday's high of 310.20, and then 310.51 daily high, and then filling the gap at 311.61, that 110-point gap from June 24th. Now, for the downside, I'm going to give you all the destinations I have because it's still just about an hour. The price probe is L's high. That's the price probe. That's the base, 307.92. Actually, we've rallied pretty good off the low of the pre-market by $1, so I'm still going to use it, right? Right now, it's being rejected, but we still have an hour, so we have to still wait and see. So 307.92 price probe. Then we had the trend day, M's low to F's high, 307.59 to 53. They're only 6 ticks, but they are still there. Then my pre-market low as of now of 306.42. Below that, we have the afternoon pullback low, H's low of 305.69. Lowest accepted price, remember, 2 days in a row we've had it. B's low of 304.73 and yesterday's low of 303.82. The POC was only 8 wide. I mean, it's something to keep an eye on, but it's not a firm reference point for me. So what are we looking at here before the opening? In balance, in value. I mean, literally smack in the middle, worst of your risk-reward trades. Does that mean there aren't any trades? No, but they're not going to be with the highest confidence until the market gets more market-generated information. So here's some things you can do. If we are to open right around where we are, around the 307.50 level, well, if the price probe is rejected, then any kind of rally up to L's high, you can take a put play. If you get accepted over L's high, I'd be out of it for 2 reasons. Number 1, you're back into the probe, but more importantly, the way I tell you, M period is so important the next day. Now, if we just get into M a little bit, but fail at the probe, I don't mind being short to see if it rolls over and then test POC in the afternoon pullback. However, if you get accepted back over L's high and back accepted into M's range, well, we know the history of M of the next day where you could trade the entire range. So that's one put play to take early in the day. The further we go down, I would not look to take a put play just yet. You're going to have POC, you have the afternoon pullback low. So I need more market-generated information if we start one-time framing down, things of that nature. Now, as far as a call play, right here I don't have one. If in the next hour it trade down, you can take one against the afternoon pullback low. But again, just like any afternoon pullback low or afternoon rally high, they're a very important reference point, but they're not as strong as the day they're happening, right? Yesterday, the indices are up, so when we pulled back, we're certainly looking for a long. Well, if we are to trade down to H's low today, the indices are obviously going to be down, so it's not going to be as strong a thing to lean on. You can lean on it, but then it depends. Do you want out when that breaks, or are you going to take the heat down to B's low? So H's low is 305.69. B's low is 304.73. It's almost $1 worth of heat. So that's something you have to decide. You want to buy here, add as we go down, and see if we hold B's low and value low. Something you can do. Depends on the level of heat you want to take. Another call play you can take is if we open around this level and then get above L's high, or we open above L's high, then you can take a call play, right? And then you have two outs. Either acceptance back into L's range below the price probe, or certainly acceptance below M's range. Now that's not that big a difference. L's high is 307.92, M's low is 307.60, so you're talking about 35 cents worth of heat if we were to open above here and you take a call play. Just remember, every one of those trades are in balance, in value, not the best risk reward. You're a member of CamelbackTrading.org. Up-to-the-minute updates on trade ideas before the open and throughout the entire trading day. Now, let's go to the charts. New month. One time framing up for 2 months. We're above May's high, which is a very nice start. Obviously, you want to stay above there, right? Right now, we're getting kind of close to it again. The biggest goal for the bulls is obviously last month's high now of 323.41. But I think even more important, you have to get above March's high, because otherwise, even though we're one time framing up for 2 months, it's kind of a 4-month balance. So we have to get above March's high of 313.84 before we can take out June's high and go for the all-time high. As far as the Bears camp, they need to take out last month's low of 296.74 to stop the one-time framing up and put them firmly back into balance. Weekly, 2 days to go in the week. Inside week down has failed. Now let's see if we're just going to balance the rest of the week, or in these next 2 days, do we have the energy to go up to last week's high or to come back down and take out last week's low again? It remains to be seen. Overall, we're in almost a 6-week balance. And then on the daily, firmly in balance. We stopped one-time framing down for 4 days yesterday. It's firmly a 5-day balance. Yesterday, at that M run-up, we got close to the top of it. 310.51 is the top of the balance. The bottom of the balance is 298.93. So if the bulls cannot get back up to yesterday's high and test the top of this balance, well, balance rules apply. If you can't get above these 2 days' highs, eventually you'll roll over to the bottom of the balance. Good luck trading today. Have a great day, and we'll recap at 4 p.m.